As we head into 2022, we think that we are past peak growth, and we might see central banks starting to move away from their super easy monetary policy, but at the same time we think fiscal policy will remain supportive of economic growth. We might see continuation of supply chain and energy bottlenecks and also some regulatory risk around China, but overall we think the environment will be supportive for credit and equities. And so within the income strategies, we think equity income, dividends will be very important as a source of income, but also as a real asset that has the potential to grow. But also we like high yield and credit overall, like emerging market debt, where we see opportunities for investing in 2022. Equally, we're also looking at infrastructure and renewable energy, where we think there is the potential for attractive inflation-linked income to generate in those portfolios. In terms of surprises for 2022, I think on the positive side, we could see central banks not meeting markets' expectations in terms of rate hikes that have been priced in. There's been quite a lot of aggressive repricing of central banks for 2022. And despite maybe more persistent inflation, we think that central banks will not meet those expectations. So bond markets could outperform, and those lower yields could also support equities and credit markets as well. On the negative side, I don't think we're completely out of the sort of pandemic situation yet. We think the virus is still there. There's still a risk, especially with the potential for mutation or variant that is vaccine resistant, especially as we've gone through the cycle of vaccinations and there's more resistance to vaccines now. So that again is another potential negative risk. In terms of opportunities, we think high-yield bonds in Asia and China are particularly attractive at the moment. The market has been buffeted by regulatory changes that have taken place in China this year, but that has created a lot of volatility, and that volatility creates opportunities, especially when we look at the fundamentals of the asset class, the health of the balance sheets, and what the companies have done in order, broadly speaking, to be in better shape. And so we think when we look at the different scenarios, we think the upside outweighs the downside from this point. And so this is an area that we think could be quite attractive in 2022. Sustainability factors are very important to our clients and to us, and increasingly we're incorporating sustainability strategies. For example, we've recently invested in an energy transition strategy, which looks at energy infrastructure that can help move the economy from fossil fuel intensive energy production to a net zero environment. We need these energy transition strategies to help move us to a world where we can rely exclusively on renewable energy. And this is a strategy that we've invested in this year, and we think will produce good returns going forward.